All right. So we should be all set streaming to all destinations. So let's get this show underway. Now, no demonstration would be complete without a quick look at the disclosure. So all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. And Bookmap team would love to have you join us on their Discord. It is a great community. There's lots going on. And personally, if you're trying to learn more about the product and really get a sense as to how you can have it add value to your trading process, this would be where I'd have a look. I also do one-on-one coaching for traders. So if you need a little extra help, if you're really trying to get the most out of Bookmap, I can also help with one-on-one coaching. But either way, definitely join the Discord. There's a great team of people there, and it's a great place to check out. I'm just going to put one more announcement out about the stream starting. All right. So a bit about me. I've been trading now for 20 years. I know that dates me, but it has been an absolutely amazing journey. I've learned a lot about markets, the dynamics between monetary and fiscal policy, earnings, the different drivers like liquidity that have become increasingly important, particularly since the post-Great Financial Crisis world. You could argue that's one of the most, if not the most important driver of price discovery in these markets. And I started off as a more discretionary trader, and then I became more and more systematic as time went on. I really learned that data should be my compass, not only to help guide my trading decisions, but also to help to remove emotion from the picture whatsoever. So for folks out there that are, not necessarily sure what fits their psychological profile best, my recommendation would be to take some time to think about really how you're wired. Look at your trading. If you're not keeping a journal, start keeping a journal and figure out if your emotions for your trading are an asset or a liability. If they become a liability, then it's likely that you're better served being a systematic trader. And order flow interpretation is somewhat on the balance. It can be a bit more on the discretionary side. It can be a bit more on the systematic side, depending on how you use order flow. I try to be a bit more systematic about it. A lot of the ways that I use order flow are areas that I've either back tested or at least I have models that give me feedback as to where the most probabilistic outcomes may be. So let's talk a little bit more about why I watch order flow. I like to prime my presentation where we'll dive into live bookmap shortly with a little bit more about why I value order flow for my process. So watching differentials, or what we call deltas, this is a really important part of order flow. For example, knowing where someone is getting more aggressive, whether it's a buyer or a seller, can help us to make decisions as traders, whether we're looking at the session volume profile or the delta bubbles on screen in Bookmap. Understanding which side is showing more aggression can give us early signs as to where there may be a reversal or continuation. It's also important to look for large passive order flow, like icebergs. They can actually be a valuable guide. Often is the case that when you're about to see a reversal in the market, you may see a large amount of passive order flow coming through. Sometimes that can cap a big move higher, particularly when you see a stop run that's a bit exhaustive and that passive order flow is selling, that other side of the trade is selling down that exhaustive move. And the opposite can happen as well, where you have an exhaustive move lower with a stop run, lots of longs pulled out, and then you have these passive orders coming in and scooping up those contracts. So understanding that passive order flow, which is one of the parts of Bookmap's MBO package that I really enjoy, because it's not guesswork. We're not looking at volume profile and trying to extrapolate what might be an iceberg. We know what actually are iceberg orders. That's a big difference. And exhaustive trading action, when one party gets off sides, I have an indicator I've built for that, but you can also read the tape and see that exhaustive trading action. But at the end of the day, order flow for us near-term traders, and I trade multiple time frames, but I do like day trading. I'm a lower frequency day trader, but I still enjoy the process. This sort of exhaustive trading action can also lead to these more meaningful reversal points. So let's talk a little bit about why I use Bookmap. It really brings all of it together. So I am not a fan of having too many charts open at the same time. I really like to have, for my day trading, just two primary charts, my Bookmap chart and my Motive Wave chart. Bookmap for drilling in to what's going on minute by minute, and then the Motive Wave chart for a more zoomed outlook at the market. So the powerful visualization, the key data on one screen, the easy to layer on new features, all of that is really helpful for me. Now let's also talk about some of these key levels that we're watching in the markets right now. This is one of the areas that I think still has yet to be fully appreciated. And that is that we do have, in my opinion, an enormous amount of influence from the options market. And there's about 1.2 trillion of notional that trades across SPX options every day. That dwarfs all US equity index futures contracts trading put together, which is about $500 billion per day. So the tail really wags the dog just in SPX options alone. And that's a big deal, because what that's really telling you is that you have options as the largest source of price discovery influence in these markets. So the key levels that we're going to be watching really this week, the call wall at 6,200, the put wall at 5,900, those are the really big resistance and support levels. Today, though, the really big level that I think we should watch intraday is 6,000 SPX. Okay, the delta is around 45, so that's like 60.45 ES. That level, how we trade around it during the cash session is going to be really important. We also have the gamma flip level, which we had a decent amount of interaction with yesterday. That's 59.82. Now, above that gamma flip level, the further you get into positive gamma, when you back test positive gamma, it tends to lead to upside continuation. When you back test negative gamma, it tends to lead to downside continuation. There is some nuance there. You can't just be right on the line. Like, we're basically at neutral gamma right now. So it's not as influential until we get deeper into either side of the territory in terms of how that may impact price continuation. You'll also notice we have a vol trigger level at 59.50 SPX. So that is a key level to watch as well, because if we do make a push below it, it tends to increase volatility, and it also tends to increase the chance of downside continuation. And the daily pivot that I'm watching on ES is 60.38. So that's going to be the level that, if we get above that, I want to take longs. Otherwise, I am more inclined to look for shorts, but that daily pivot of 60.38, that's the level that I think is really important to watch today. Now let's talk about a few exclusive deals that we have going on right now. If you're interested in picking up a copy of Bookmap, you can do so at traderaid.com/bookmap. You can get up to 40% off. That's a pretty good deal. Scroll down to the special offers at the bottom, and again, you can get up to 40% off. So check out that deal. Also check out the next deal that I have to share with you, which is you can get up to 20% off of TraderAid using the code Mayhem20 at checkout. So 40% off Bookmap, 20% off TraderAid. Pretty good deals here. So let's dive into Bookmap now. I'm just going to close out of the presentation and bring Bookmap on screen. And we're going to take a look at what's going on pre-market here. And I'm going to shift just a couple things around. We do have a few things to demonstrate for you all today too, but just give me a moment. I'm just going to pull some things sort of to the front. For whatever reason, for my organizational purposes, I just like to have the futures contracts at the front. And the last time I opened Bookmap, it kind of reorganized them a bit for on my behalf, I guess you could say. And we are going to be taking a look at multiple different contracts, including gold, silver, the 10-year note futures, NASDAQ, S&P, Bitcoin. So we'll be going all over the map here. Should be fun. And we'll also be looking at some of the bigger stocks out there like Nvidia, Tesla, Microsoft. All right. So we've got that all open on screen. We've actually got the Bitcoin chart on screen right now. Let's zoom out a little bit, talk about the overnight action in Bitcoin. So a bit of a dump overnight, just around 6:30 a.m. is when most of that happened. I'm not sure if that was headline driven, but that selling pressure has now since pulled down the point of control just about 100,700. And I think that is something that's worth watching. Now, let me just take a look at one thing because I think we need to make sure that our price levels starts at 9:30 a.m. just to kind of comport with the rest of the cash session. But yeah, this does look just a little bit bearish going into today's tape. Obviously, Bitcoin has had a nice run, so a bit of a pause, maybe a bit of a selling impulse is not the worst thing ever. If we do want to see this kind of bottom and take off, you don't want to see it just going straight up. You do want to see sort of a stair-step pattern of going up, sideways to down, going up, sideways to down. That's a healthier way of ascending in price. So we'll pull that back to 20 minutes. Let's look at the S&P as well in the overnight session here. And we can see that overnight, it's actually had decent bid, a bit of an upside bias. We're actually testing that pivot level now that I was talking about, that 60.38. So that is interesting. I think that is an important level to watch today. I'd be more inclined to want to take longs above that level. We can also see one of the walls of calls right up here at 60.50. This is the closer one when we're zooming into intraday call walls. And so that's another area where we can reasonably expect some overhead resistance. And I know that some folks look at this bracketed liquidity and say, gee, you know, this makes Bookmap less useful for my trading. The good news is TraderMap Pro clears that right up. So instead of having to stare at that bracketed liquidity and wonder where the real bids and offers are, you can actually filter that out. TraderMap Pro, as I recall, is part of the MBO package. So you're able to filter out all that nonsense and you're able to still visualize where the real heat is in the heat map. That is to say, where the real interest in pricing is. I find that filtration invaluable. So most of the time when I'm looking at Bookmap for decision making or analyzing order flow or distribution of liquidity, I'm looking at it in that filtered view. There is also TraderMap Lite, which is free to use. So it is something that, you know, you can take advantage of without necessarily having to buy any more than the base Bookmap subscription. And it's kind of cool because it will actually ask you when you add an instrument, hey, do you want to use TraderMap Lite to filter out this liquidity because we detect that there's algos on this contract. So overnight session in the S&P overall looking pretty decent. Not a very powerful bid, but certainly overall positive. We did have CES yesterday. Initial reaction was less than ideal. There was a little bit of selling on the RTX 50 chips coming out, but then there was more talk of autonomy in cars, robotics, and a $3,000 supercomputer that helped to really spark some after hours interest in NVIDIA stock. And this morning, it does have a bid to new all-time highs, up about 2.67% to 153.42. We'll just quickly peek over there so we can see that in NVIDIA, and we can see some of that, over the pre-market session this morning, that climb that has pushed this stock up to really, really, really high levels. And there is a lot of excitement here, and some of it is indeed warranted. You can see there's interest building overhead in higher prices. It's about even. There's about 2.3 million shares on offer and 2.3 million shares on bid. And some of those offers overhead, 154, 155, and 160, are probably the more important levels to consider watching given the amount of liquidity at those levels. So I just pop that out there to share with our broader audience. Let's go over to the NASDAQ, since that really is the momentum leader right now, and we'll pull it into the filtered view. Just looking at the overnight price action, again, pretty constructive consolidation through the European session, and then the pre-market here in the US seeing that bump higher. And we do have a lot of interest overhead. We have these offers forming at 21,800, and then just all the way up, like 21,000 looks like 830, and then 840 and 850. These stacks of offers are reasonably large on the NASDAQ because the NASDAQ is not an incredibly liquid trading vehicle. So it's important to take that into consideration, because if you're looking at the order of magnitude and difference with liquidity in the NASDAQ versus the S&P, it's quite a bit different. If you look at the unfiltered view of the NASDAQ, order book depth right now is 6.7 thousand. The unfiltered view of the S&P shows order book depth at about 33,000. So that's a pretty big difference, right? It's about fivefold more liquidity in the S&P. So that gives you a sense that these offers in the NASDAQ are of reasonable size, and there is some interest in higher prices from here, just right around where spot pricing is. So that's something to watch as we get into the open. We do have, and I was meaning to talk about this just a little bit earlier, but I want to get into it now. We do have a pretty interesting calendar this morning. So at 10 a.m., we get ISM Services PMI and JOLTS job openings, one after the other at 10 a.m. ISM Services PMI has a forecast of 54. JOLTS has a forecast of 7.69 million. Any strong deviations to the downside are likely to be interpreted as bullish by this market, which is now looking for bad news as good news. Any strong deviations to the upside would likely be interpreted as bad news, because that could tell the Fed, especially with JOLTS, that there's less need to cut soon. This market is once again of the mind that it wants cutting. So here's today's calendar. I think that it is going to be an interesting day. JOLTS tends to be a market mover if it is one that has any kind of surprise to it. And the last few readings have been somewhat surprising. And a little bit of a draw here, NASDAQ pre-open. We're just about 7 minutes away from the market open here. We did get Johnson Redbook year over year also, printing a gain of 6.8% versus the prior reading of 7.1%. So that does tell you the consumer is still engaged, still buying. There is some inflation in that number as well, so perhaps the real number is closer to 5%, but nevertheless, that's not too bad. Year over year during the holiday season, Consumers are ramping up their spending, so that overall, at least for that upper tier of consumers, they're doing just fine. The lower tier, those aggregates don't look quite as good. We also do have some Fed speaking going on this morning from the Fed's bargain, which could add just a little bit of volatility to the pre-market tape. Let's take a look at gold here ahead of the market. And gold has recently been pulling back. I'm not particularly concerned about the pullback for my thought about $3,000 gold this year and really the first half of this year. I do still believe we're on track. And remember, leading up to this pullback, I had been saying that a healthy correction or consolidation would be something we want. We actually don't want the price of gold to just run away parabolically higher. So the move that we had over 2024 was a very strong move higher. Typically, if you want continuation in a move that strong, you want consolidation or a drawdown. You do want to try to shake out some of the weak hands so that they have to buy back at higher prices. That's how trends are made. And the parabolic moves that happen very quickly in a short time period that are up and away, those often don't end well, whether it's gold, silver, Bitcoin, name your favorite stock, whatever it is. But if it is a more constructive stair-step move higher, those moves tend to have staying power. And that's exactly what we're looking for in gold. So this consolidation has been healthy. We see a strong bid overnight. If we're looking at gold price change, right now it's up about 0.9%. Silver's up about a full percent. Platinum this morning up 3.3%. So overall, the metals complex looking pretty good today. Dollar is about flat. So gold rallying this much, maybe it's catching up to yesterday when it was down when the dollar was down, which is not something you often see. Even rates on the long end are pushing a bit higher, which sometimes can, because this is competition for gold, these yielding longer duration assets. Sometimes that can put some pressure on gold, not so much today. So that's a healthy sign. Overall, gold looking pretty constructive this morning. Silver as well. When we look at the zoom out here, we can see silver now back to trying to retest around $31 an ounce, which is a healthy sign. There is some key resistance up there. We'll see how we fare throughout the trading day. And then when we're looking at 10-year note futures, we did have that 3-year note auction yesterday. It was not the best auction. There was a bit of a tail in that auction, which is a little concerning only because we've had so much of a rate increase that you would have assumed that there'd be better demand, but indirect demand was also pretty low. Today, we have a 10-year note auction. That's going to be quite a bit more important in my view. So all eyes on that 10-year note auction coming up, I believe around 1 p.m. The results posted shortly thereafter. And then tomorrow we have a 30-year bond auction as well. Today's offering amount is $39 billion. Tomorrow's offering amount for the 30-year is $22 billion. So we'll be watching over at the Trader Discord this 10-year note auction pretty closely because it does set the tone. And yesterday's 3-year note, yesterday's 3-year note auction, when it went not as well as hoped, it did have an impact on market price discovery pretty directly. Now let's work our way back to the S&P as we get to the market open. We do have that 6038 pivot in play. We talked about that just a little bit earlier in the stream. Still something to take into consideration here. How we move with that pivot, I think, is going to be pretty important. I also want to see how we trade with the opening range today. I'm going to take a look at a statistic here. And we'll break it out by weekday. So Tuesdays have a 59.83% chance of a double break on a 15-minute opening range. So basically, you can break one way, and then you still have about a 50% chance of basically breaking the opposite way. So that is lower than Monday. This is over the last 6 months of trading data for the S&P 500. But it's still an important statistic to take into consideration because we don't want to get head faked by that type of a move, right? So here's that statistic. It's from a program called Edgeful that I've been learning more about. It's pretty interesting, but we're looking at 6 months of data, 15-minute opening range. And I talked to the folks there yesterday. They said they'll add the 20-minute opening range for me shortly so that we can also look at those statistics. But nevertheless, on Tuesdays, there's that 53.85% chance of a double break, essentially meaning you break to one side of the opening range and it's very likely you pierce the other side. In fact, that's more likely than a breakout or a breakdown being clean. So this is also a phenomenon that has been shifting over time, which is very interesting. Let me just take a look at this and pull it back, let's say, to 2 years. Over the last 2 years, it's been 62.50% of the time that you see a double break on Tuesday. So just a note, if we're looking at opening range, we can't necessarily put 100% faith in that. We need to see options confirm it. We need to see the price action confirm it. Otherwise, we could be at risk of one of those double break days. So market's about to open in less than a minute here. We'll watch that market opening. And really, I do like to look more at the 20-minute opening range to see how much price action we may be getting. That is to say, that 20-minute opening range tends to be kind of foretelling as to how volatile the trading day may be. I also think the data at 10 a.m. has me wanting to sit on the sidelines until the market parses it, because that, if it gets, let's say, a surprising move in either direction, JOLTS or ISM, if there's any kind of standard deviation away from expectations, that can also run stops on both sides. You can have a lot of illiquid price volatility that can kick people out on either side of the trade. So when there's a day like this and there's two really big macro data points on deck, I tend to like to wait for those to be out of the way before I'm going to put on a trade. So I will stick around for maybe just a few minutes after those 10 a.m. data points, just so we can talk about what I think they mean for the market. But my presumption is bad news is good news. That the market is back to the mode of wanting more Fed cuts than what has been scheduled, what has been projected, and what has been forecasted by markets at this point as well. Both the Fed and Fed funds futures are really only looking for 1 or 2 cuts this year, but the equity market really wants more than that. So markets are open. We are making a push above that key 6038 pivot with a bit of continuation to that Gamma 1 level. The SPX options visualizer is showing on screen. And we're going to take a look at some of the larger mega cap stocks here in just a moment as well. Small stop run just went through. You see 100 contracts, or I'm sorry, bit of a passive sell side on the iceberg happened just there. About 100 contracts sold into that move. Nothing too significant, but still worth watching to see if that layering on top of strength continues, because if it does, it can put a bit of a cap in upside. So right now, a small amount, but maybe an opening shot or maybe just a desk taking some profit there. We'll watch. That was just around that gamma 1 level, which is also a level of potential options implied resistance here. And these levels from the SPX options visualizer update throughout the trading day minutely. When we start to see the flows come through, those options levels from yesterday will update as well. Let's take a look at the NASDAQ. Pretty choppy. We're going to clean this up with the filtered view, but pretty choppy open overall. You can see we are pushing to new lows on the NASDAQ here. Contrast that with the S&P. You're not seeing the same there. The S&P is trying to push to highs. The NASDAQ is looking at lows. But now the S&P is starting to see just a little bit more pressure. Remember, the NASDAQ's been leading this market, so I think it behooves us right now with tech showing the relative strength that it is versus the broader market, particularly in the very large companies, to watch tech more closely for clues about momentum. So speaking of tech, let's shift over to some of these stocks. We've got Apple on screen. Apple has a pretty decent open so far. You can see Apple is down about 0.2%, but off of its lows and trying to push to new highs here. New cash session highs reached recently just under 245. That is where there's a decent amount of liquidity overhead, about 37,000 shares on offer. Right now, about 31,000 shares, but when that printed, it was about 37,000 on offer. And you can see price rejected there. So if you're looking at this just from basic auction theory, what does that tell you? It tells you that that offer is a little bit insurmountable right now, that there's not enough demand to absorb those 31,000 shares. So price retreats, right? So Apple started off with a decent push higher and then saw a ceiling, so to speak, at about 245. Let's take a look at Amazon. Oof. Amazon selling down to new lows off the open and just kind of continues to look like it wants to push lower from here. Meta, a similar look, selling off right off the open, making new lows. There's a lot of demand overhead in this stock where management has apparently embraced the MAGA philosophy, or is at least reducing censorship on the platform. There's a board shakeup that's happening there as well. So it is interesting to see Mark Zuckerberg try to cater more towards Trump. Nevertheless, market not particularly impressed, not seeing any reason to bid up the shares. Meta right now trading down just about 0.9%. Microsoft, a similar look as really many of these other stocks, maybe with the exception of Apple. It's basically flat right now, but it is selling down to new cash session lows. And then Tesla, the ultimate beta beast, trying to make a push to new cash session highs here, having recently done so and seen a wall of resistance at that offer at 410, which was once as large as 38,000 shares, but now just about 16,000 shares. We're going to take Google and just sort of move them alphabetically over here. We'll do the same with NVIDIA in a moment, but Alphabet shares actually reaching new cash session highs and then pulling back. Not necessarily in reaction to a large offer zone, but they did absorb an offer around 198.50, and then buyers got a bit tired. And then, of course, we have everyone's favorite stock to talk about, to love, to hate, to make baseless conspiracy theories regarding. That is NVIDIA, still up about 1/3%, but well off of its earlier highs. And to start the day, there was a pretty big sell order, right? There's about almost 3 million shares on sale right at the cash open. It doesn't seem like the stock has been able to recover from that yet. So far, NVIDIA barely clinging on to its gains, up about 0.2%, heading to new cash session lows. So I think we can see why the NASDAQ is having a difficult day so far, because all of the leadership stocks in the NASDAQ are themselves having a difficult start to the day, including the stock that everyone is watching for its reaction to that all-important CES event, NVIDIA. My own take is that there is competition increasing for NVIDIA, but what will make it matter, really, is if either they're able to create a software ecology that can compete with CUDA at scale, which seems unlikely in the near term, or if we see regulatory risks realized by the EU. That is to say that the EU starts to crack down and forces NVIDIA, at least in Europe, to open up CUDA to other companies. That could be somewhat disruptive. But that's not on the forefront right now of investors' minds, and we haven't heard much from regulators over there either, so we don't even know if that's even going to happen. But if one wants to qualify a left tail risk for the company, more realistically, it's that than it being the next Enron or any of that other stuff. I've looked through all the sort of conspiracy tinfoil stuff. None of it really has much merit. And yes, SMCI, their accounting issues are real, but I don't see the same issue at NVIDIA personally. And I wrote about this actually in early 2023 to try to dispel some of this conspiracy stuff and take the wind out of its sails. And I still see it permeating social media. It's crazy how much sometimes when folks maybe miss out on it or are betting against it, how angry they can get, how they can project that and create rumors and try to undermine, well, one of the biggest companies on earth. Good luck with that. But yeah, it's not a conspiracy. So NVIDIA now making new cash session lows, trading off of that 149 level, and looking like a lot of the other tech stocks also making kind of similar moves. Microsoft just recently made new lows at 935. Meta is continuing to make new lows here. Google is consolidating, but it's off of its highs. And Amazon just absolutely cutting through that liquidity below, making new lows. Apple also, like Alphabet, a little bit more resilient, although it had a rough couple of days ahead before this. So, and then Bitcoin holding on to that 100K level so far, but also making new cash session lows recently. Let's move back to the S&P 500 here. We're going to look at it in the filtered view. S&P also making a pretty significant new cash session low. And we saw right here this test of Gamma 1. This wick got right into that Gamma 1 level, and we rejected pretty heavily from there. Now we're testing the Gamma flip level. So we're basically in neutral Gamma right now, which portends to the distribution of options positioning not necessarily having a big impact on how dealers hedge. But if we get more into negative Gamma territory, you get into more of a chase environment. That means it's more likely that dealers are going to sell dips, buy rips, and kind of exacerbate that realized volatility. And the deeper you go into negative Gamma, the more likely it is you have some degree of downside continuation. And that's more on a swing time frame when you're back testing it. So it's just something to take into consideration as we get this trading day started. We're just at about 11 minutes into the trading day, so obviously anything can happen. And remember, we talked about double breaks. We can't get that out of the back of our mind, that even if we do have a breakdown from the 15 or 20 minute opening range, Tuesdays still have a decent chance of a reversal, of a break the other way. So checking in on the cash session here, NASDAQ is flat. S&P 500 bid up about 0.2%. Dow up just shy, well, now just about 0.4%. Fitch has some headlines coming out as well. The U.S. faces several key fiscal policy challenges in 2025. You've got that right, because interest spend is really the biggest part of deficit spend now. And that could be set to move higher with the long end continuing to march higher. So that would put pressure on the ability of the new administration to pass any aggressive spending packages because, well, we really can't afford it. So we see the market trying to stabilize here just above that gamma flip level. We see really a little bit of buy delta on SVP or the session volume profile, but nothing too significant. No real evidence of buyers being very offsides in this session yet. Sellers were getting a bit more offsides as price moved higher, but again, no really aggressive delta prints in that volume profile of yet. Let's take a look at the NASDAQ, and then we'll move around to some of those bigger stocks. NASDAQ well off its lows. We did see buyer absorption here. This is from one of the indicators I built. That just tells you buyers are getting more aggressive, absorbing seller attempts in the NASDAQ. So that tends to be constructive. Sometimes you can see a scalpable reversal off that buyer absorption. And certainly now we're pushing above the point of control on the NASDAQ. We also see some iceberging from those larger institutional desks buying up NASDAQ contracts. And a sell side iceberg right on top of that buy. Apple now pushing to new session highs. See a reasonably large stack of offers at 247 with 17,000 on offer. Amazon still struggling, but off its lows here. Alphabet pushing to new session highs. Remember, Alphabet and Apple were the two we were watching that were showing a bit of relative strength versus their peers. So not too surprising to see Alphabet and Apple really showing a bit more strength. Meta now off its lows. Microsoft off its lows, pushing above the point of control, so looking like it wants to try to put in an interim low. NVIDIA off its lows, looking a little bit, I would say, weaker off those lows than some of its peers. And Tesla pushing to new cash session highs. Large offer overhead at 415 with 29, now 30,000 on offer. So we are seeing some strength come back to these NASDAQ mega cap stocks. And that's helping to push the market off of its lows here as well. Got data coming up in just about 13 minutes here with JOLTS job openings and ISM services PMI. Let's move back to the S&P as well. We can see it is consolidating off of its lows here like the NASDAQ. We'll zoom in just a little bit on the near-term price action for both of them. just starting to make a push above that point of control, coming back, retesting it, and putting in what appears to be a higher low. So overall, looking a bit more constructive. And if we were looking at this from the 15-minute opening range theory, then, we could say that we still haven't really made a decisive move either way. But I do start to, well, I really do favor 20-minute opening range. And so we can look at the top line and the bottom line, the highest and the lowest price right now as we get to 950, and see if we have a move above and build acceptance, or below and build acceptance of either one, the high or the low. I think it is important to at least watch that, but we do need to keep in the back of our head that there is a decent chance of a double break should we have a breakout or a breakdown. And we are starting to see some of the options flows coming through, largely favoring calls. So we'll zoom out just a little bit. We can see those flows coming in to that hot call level. And that relates to 60-20 on SPX so far. The put call ratio 0.69, which also gives you a sense there's about 31% more calls transacting than puts across the SPX chain this morning so far. About 10 minutes away from ISM and JOLTS data release as well. Typically before those large data releases, you have liquidity on the heat map shrink. So we'll be watching for that effect. A lot of this heat that you see above and below price will probably dry up for a bit just before that data, during, and then a bit afterwards. And this is one reason that I recommend folks be careful having too much size on or any real directional positioning on ahead of these events if you're day trading, because it can get a bit dicey. You can have chop, and even if you're on the right side of the trade, you may get stopped out by that chop before the directional move finally happens. And just some more chatter from Barkin, who's been active since 8 a.m. The U.S. faces, the Fed remains highly committed to its 2% inflation target. I have a hard time believing they're highly committed to it when they've been cutting and inflation's been remaining sticky, but, they have to say these things. And if there are more price pressures, we'll have to be tougher with rates. So you are at least seeing them float those trial balloons that if indeed inflation remains sticky, or God forbid it reaccelerates to some degree, that the Fed may go to the other side of the ledger and start hiking. And Apollo, a private equity group, has actually been one of the contrarians at saying the Fed may indeed hike this year. I've also said similar, that I wouldn't be terribly surprised that if inflation started to rear its ugly head, that they wouldn't be left with many choices. And also, quite frankly, I feel that cutting by 100 bips so far has been a bit of a policy error, given that we haven't had much of an all clear, and that the labor market remains a bit more resilient than many expected it to. Barkin goes on to say consumer debt is nowhere near the alarming levels of the 2000s, which I think is a fair assessment. It is indeed not like we saw going into the great financial crisis, for example, where households were very, very leveraged. A lot of that leverage has been transferred to the balance sheets of the Fed and the government. If we're looking at where the leverage really went. Let's zoom out a little bit more. Looks like there's some more aggressive call positioning yet. We're seeing those calls rolling higher here. So that most active call strike coming in at what will be S&P 6030. And so just as a reminder, our daily pivot is 6038. More inclined to want to take longs above that level if we can get above it and build some acceptance, particularly if it's part of a dynamic where the options flow agree with that move. So if we pull above 6038, we see, say, a decent amount of excess on the call buying side. I like to look at the hot call and warm call with 40% more volume than the hot put and warm put as just an example of that flow favoring more upside. That would make me want to take a long into this. For now, we're still consolidating. We've got about 5 minutes left before that data release. So there's still time for this market to try to kind of shake folks out and also show us which direction it ultimately wants to go. For now, not really a strong sense. We also don't have a particularly inspiring 20-minute opening range here, just about 16 handles. So that suggests it may not be a very exciting trading day. That's kind of within the averages of the opening ranges that we see over the last year. And we're just balancing around that point of control. So just before the data, we'll take a look at the NASDAQ and some of these larger stocks. NASDAQ, kind of a similar look here, just sort of consolidating over the last 10 minutes. Apple, similar look as well, just sort of consolidating here. We'll just zoom it out to a 30-minute chart now. But yeah, essentially just consolidating. Amazon as well, just consolidating over the last 15 minutes. Alphabet, though, continuing to push to new highs. Some impressive relative strength in this company so far. Meta consolidating around its lows, kind of building some acceptance around making those intraday lows. And Microsoft consolidating close to the high. So again, Apple and Google were leading earlier. Microsoft is now joining the pack, showing some strength as well. So that's important. Now it's 3 out of the 7 essentially showing us some renewed strength. NVIDIA, however, cutting to new lows. That's not really what we want to see, especially after that CES. And Tesla, off of its highs, now kind of joining the pack, consolidating here. So we're going to move back to the S&P ahead of this market data coming out in just about 2 minutes here for JOLTS and ISM Services PMI. The forecasts that I have from the trading economics calendar for today are 54 for ISM Services PMI and 7.69 million for JOLTS. The prior reading for ISM Services PMI was 52.1. Prior reading for JOLTS was 7.744 million. Now, what do each of these data points mean? Well, ISM Services PMI is a composite index. It's a survey, and it has several different inputs to that survey, like prices paid, backlogs, employment, new orders. Anything above 50 is expansion. The more above 50, the larger that expansion. Anything below 50 is contraction. The further below 50, the deeper that contraction. And then JOLTS is the number of jobs on open, right? It's the number of jobs that are available for people. But there is some distortion in this data. If we're being honest, there's a lot of jobs on offer that companies have no intention to fill because they know that to some degree, investors look at job openings as a sign of the health of a company. So they're incentivized in a way to offer more jobs than what they potentially want to fill. Sort of projecting health, where in some cases it may not be as robust as projected. So we do have to kind of take that with a grain of salt and say, okay, the JOLTS number is probably overstated by some amount, particularly in areas like tech, where there's all kinds of jobs on offer and many of them are not real. Nevertheless, this is still a number that has not reverted to levels that are concerning. It's only really reverted to levels that are, I would say, like we're going back to pre-COVID era, where we're not in a super tight job market anymore, but we're not at the point where the whole labor market is rolling over. There have been pockets of weakness, no doubt. There has been an unequal recovery, and I think that is something to take into consideration. Manufacturing remains challenged in this country. Tech is now an industry where there's been lots of firings over the last several years. And we can see, look, going back to the heat map, all that liquidity, it's going away right ahead of the data. About 25 seconds left till we get JOLTS and ISM. There's that liquidity disappearing. This is why you've got to be careful ahead of these data releases, because without that liquidity, you don't have that buffer to absorb price action. 10 seconds. And we've got ISM services PMI coming in stronger than expected at 54. And we've got JOLTS coming in stronger than expected at 8 million. That's 8.098 million. Those are both stronger than expected numbers. We talked about this earlier on the stream, that those would be interpreted as bearish because good news is bad news. So the market's not liking this stronger than expected data so far. And I think that is something to take into consideration. We talked about this earlier in the stream. What the market really wants is the Fed to come to the rescue with more cuts. When you get data like this, where the services industry is growing faster than expected, where job openings are coming in much higher than expected, that doesn't give you a sense that you're going to get more of those cuts. So you get a negative reaction from the market. So let's just take a look around. We see the S&P pushing to new cash session lows. We see some seller exhaustion earlier, but because of a move, the move was this big, and it was part of a stop run in a kind of an illiquid environment, I don't think sellers are legitimately exhausted of yet. So we'll take a look there. We also see the NASDAQ. We have some passive sellers pushing it overhead, buyers trying to absorb that pressure, but that pressure remains pretty adamant. Sellers are continuing to push this lower. You also see a big push lower in rates in terms of their pricing. So the actual rates on the long end are moving higher. So to be clear, 10-year note futures moving lower, 10-year yields moving higher. That's a little bit of an issue for the way that this market is pricing in rates, because again, it is getting increasingly sensitive to rising long end rates. And I do think that these pushes become more important the further we push above 4.5% on the 10-year note yield. So this morning, we're seeing that 10-year note yield pushing up to 4.679%. So that is a pretty chunky push higher. Let's take a look at some of the larger stocks here. Apple largely unaffected. Interesting. It's sort of in its own world. Not really worried about that data print. Amazon, however, taking a pretty big pull lower, filling that 225 liquidity, about 28,000 shares absorbed. Alphabet also relatively ambivalent, a bit of a pull, but nothing too significant. Meta also making new lows. Seems like some of that selling pressure started even before the data was released. Microsoft consolidating, still looking pretty resilient here. Again, not a major reaction in Microsoft. And Nvidia seeing some buyers absorbing that selling pressure, but nevertheless making a new low after that data print. And finally, Tesla also making a new low. This is an interesting reversal. This thing's been kind of all over the map, but in the cash session here, Tesla now making a new low and pulling closer to that 85,000 stack of bids at $400 a share. So it does look like we have a little bit more potential for weakness, but again, keep in mind that Tuesday double break, that is still in the cards. So it doesn't necessarily mean that it's a sure thing. We do still have call pressure building up ahead in excess of put pressure below as well. So for now, I still think it's wise to sit on our hands for a little while longer and see if we start to build a buyable bottom here. Because for now, options are still telling us it's more likely that the market wants to try to move higher than lower. So we have to see if that changes before getting enough data to tell us that there's a probabilistic outcome in one way or the other. For now, I think if we have a lower move, it's closer to already played out unless that options flow really picks up. Because you can see there's 13,000 between the hot call and warm call. There's 8,000 between the hot put and warm put. So for now, that call transacting still really does favor us maybe bottoming out sooner than later and trying to make a push back to the top of the range. So that's what I'd keep an eye on. You can do that with the SPX options visualizer, which is available on our Discord at TraderAid. You can also use the SPX options visualizer as an add-on, a data add-on for Bookmap or MotiveWave that I have available at traderaid.com/SPX. If you'd like to get a discount on TraderAid, use the code Mayhem20 at checkout. If you'd like to get a discount on Bookmap up to 40% off, go to traderaid.com/bookmap and scroll down to the special offers. Thank you so much, everyone, for tuning in to this week's Back to the Futures with me, Markets and Mayhem. I'll catch you next week, Tuesday at 9 a.m. Eastern.